Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Friday, May 9th. Going to be diving into the usual tickers here. And I have to say, yesterday I did skip over gold and natural gas, so I will be covering them here. And personally, I do have a short position on gold, but I'm trying to exercise, weekly positions, so I'm not holding over weekends, so I'm moving into cash and I'm not getting attached to my place. So I'll probably be closing that before the start of the weekend. But anyways, yeah, let's dive into the charts, beginning, of course, with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a price of $38.76, being down over 7% on the day and continuing down about 1% in the pre-market. Did hit a low, though, yesterday of around $38.10, just below this downtrending light blue line, which also happens to intersect with that purple line if we were to extend that out a little bit more. So kind of a confluence of levels there. And if we do take a step back, we can see where that purple line originates from. It's really like the two pivot highs from over here, the highs from November 20th, and it looks like January 13th did serve as kind of a fake out breakout level a couple times, consolidated before below that level before launching. So I do think that is pretty notable. And if you can't tell, that downtrending light blue line is the top of this parallel channel here based on the pivot highs from September 6th, which was the high that we hit after the blow off top effectively from August 5th of last year, and then did test that as resistance multiple times, the other pivot point being from here December 19th, which we do extend this red line over from 54.60, the high from December 19th. And so, yeah, I mean, I do think that we could be forming a bottom with this soon, which means I do think that there could be a correction in the market, which would probably be healthy, especially with Bitcoin having just ripped faces off yesterday along with other cryptos. So I think that maybe we'll be seeing a little bit of a cool off period, and with that, the volatility might be spiking up. I also saw that, a trade deal, I believe a tariff deal was announced with the UK, but Trump has been talking about maybe 80% sounds right for China. But, that's really going to be all up to Scott Bessent, the Secretary of Treasury. So we'll have to wait and see. I do think that there's probably going to be some more volatility. And so from current price, if we were to just come up to that yellow line, which was the low from April 9th, that would represent an upside move of about 15%, somewhere around there. Getting back to that thick red line, that would be around 40%. And then getting back up to here around 64, 65, that would be about a 69% move to the upside, getting back to the highs that we hit over here. But I might actually want to lower that level, let's see, to the closing price from April 21st, which was at 62.66. So I am just going to adjust that over here, and I'll even lock that in place because I think that, we could be getting up there. And really, with that being said, I should probably adjust these levels here. Actually, I do have orange to the downside, but I probably want to make this one orange, kind of suggesting, that we've got this level here, thin yellow line at 44.42. Maybe that's a trim level. Thick orange line, I think that's going to be a little bit more substantial of a level, trimming a little bit heavier, and then a thin red line there. Probably not as likely to get up to there around $62, but if we do, maybe that's a trim level. And I should note that, we were recently at 105.18. That was the high hit on April 8th. But, if we look back over here, it took us a while to have such a big move again, and that was up to around $200. We did have this 1 for 10 reverse split, And yeah, so getting back up to here, hitting that high of 105. That's pretty substantial, even though not as high as over here. Following that reverse split, it is a pretty big move. And I don't expect us to get back up to 105 or 100 because we didn't, repeat this right away. And so, yeah, I mean, I would be happy with a move to 44, 55, or 60, right around there. But I am prepared for it to continue down to the downside. I do have this orange line here at $30, but I'm actually going to adjust that to be green because if we do dip to 30, I think that would be a really nice dip buying level. Did act as support over here on, March 25th or the end of March. We actually did gap down to that level and then had a very massive rally to the upside from the lows to the highs, going up over 260%. So a very nice move there. If we do pull back a little bit more down to 30, that's about a 20+% move to the downside. So I would be excited to accumulate more there. I do have a couple alerts here just to go over them. One at 36.90. I believe I had one at 40, but now we're below that. And that was really just like a dip buy level. For me, I have a couple shares, but I would look to get more at $36.90 at that 69 in there, just having fun with it. And then definitely more aggressively at 30. And one thing, not just throwing numbers out there, one thing that we can do is do a Fibonacci retracement to see if any of those levels line up. And let's see, 618 corresponding with that orange line, 50% approximately with that red line. And really where I had it previously with the highs here was a pretty nice match with that 50%, but maybe we don't get all the way up there. But this is a retracement to the downside, so I don't think that those levels are really that significant. And what we would want to be looking at is the 786. So I'm just going to remove those, put up that 78.6% retracement. We're actually below that now, so that's probably why I didn't have the Fibonacci up there. But, I think that we are getting into the discount zone, so pretty excited about that. And if we do look, before I flip over to the 10-minute time frame, if we do look, we can see that volume has been increasing ever so slightly. We have been coming back to hit lower lows relative to that yellow line. We've also been hitting lower lows with the RSI. So no bullish divergence there. Also no bearish divergence with lower highs here, lower highs in the RSI as well. So nothing too crazy there. The MACD does look like it was about to flip green or getting pretty close to it, but it does look like it's kind of flattened out some. So maybe we do get a little bit more of a pullback. This get a little bit more negative before we start to rally up. And so the MACD from yesterday, let's see, it did decrease the negativity a little bit, so that's a little bit good, but it does seem like it is kind of flattening out there. And so what I would like to see is this really, flip like it did over here from red to green, or from green to red, kind of being a smooth transition. We're not really seeing that right now, so I suspect that this will go a little bit lower, either to around 37, having fun with the 3690 there, and maybe coming down to 30. So that is what I am looking forward to with that. But looking over at the 10-minute time frame, what can we see? We did see a gap down into the pre-market yesterday, followed by a pretty big drop during the day. I believe that corresponded with the announcement of the UK tariff deal. Then we got a little bit of a bounce here, but then kind of formed a double bottom there, which we are currently testing in the pre-market. But now let's flip over to the VIX. This is the market volatility index, or I've been saying the panic index, but I keep forgetting what this is. Not the panic. I always go with panic. I'm not sure why, but it's what is the market volatility index, also referred to as whatever. Not the panic. Yeah, I always draw a blank on that. Anyways, closed yesterday at a price of $22.48, being down about 4.5% on the day. currently trading, or was closed below, because I don't have any pre-market data up here, closed below 2376, which was the high from over here at September 6th. We hit this high over here, then bounced, served as resistance, basically just the exact same that I have over here, and now they are both orange. So look at that. Wait a second. Nope. That's the light blue downtrend, because this is an ETF that tracks an index. There's going to be contango. It's going to fade over time, so it makes sense that that line is downtrending, whereas this is a horizontal line. We are putting in higher lows, as we can see. We are also putting in higher lows with the RSI, but it does look like it's getting a little bit weaker. And over here, we did break that, so there was some bullish divergence there, or really hidden bullish divergence, with this going to lower low in the RSI. And let's see. Where could this be coming down to? 20 is an important level, as always, with the VIX. So I do have an alert there at 20, and I could actually delete this one below 24, because we are below it. And then I've got one to the above side at 65. We did not hit that below 28. Can also delete that just to clean up the alert so it's not so overwhelming. And let's see. That's I don't really have too much to add to this. Just waiting for this to come down to 20, maybe coming down to 18, corresponding with the 786 over here. But actually, maybe what would be good to do is do a retracement from the low that we hit following this big move over here. So that was 1270 up to the high here. And so let's just do a quick retracement there. And let's see, what does that 786 bring us to? We're currently right around there, so let's just make sure that those numbers are correct. So 1270, 60, 13, that looks good. And that is, just going to lock that in place. 2285, we are right around there, just below it a little bit. But I am just going to, highlight this other one as being light blue. Maybe we do get down to there. And then I might just delete this light blue line over there, just so we're not dealing with so much clutter on the chart. But yeah, I do have, looks like this gap down here that was previously filled at 1418. Very neat. We did fill that before moving up here. And so pretty exciting there. But now let's look over at the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $565.06, being up 0.7% and continuing up about 0.28% in the pre-market. Did get a little bit of a bounce, like I kind of doodled up here, but did not quite fill that gap there at $554.54, which was the closing price on April 30th. So let's see if we do fill that. It does kind of look like this top up here. This could be a top, hitting a high yesterday of $570.31, as we do have that pretty big wick to the upside. A nice little doji there that could be suggesting some selling up here. As we were able to get above the closing price from May 2nd, which was at a price of $566.76. I don't have a line drawn there, but I should probably move this one to that level. And so let's just adjust that to be a 7.6 here. And so because we couldn't get a close above that, it does suggest some weakness. And with us getting a higher high in the ETF price, we can also look at the RSI that is a lower high. So that right there is bearish divergence, but we could easily go higher today and negate that. So we haven't necessarily put in a top with the RSI. It's just gone up, but we haven't had an inflection point like over here that would be suggesting that this is indeed a lower high. So I think it's good to wait for that. We can see that the volume has been increasing, so I think that looks good. But, the volume over here, it might actually be a little bit higher over here. So let's see, the volume on May 2nd was 60.72 million shares, whereas yesterday it was 65.31 million. But we actually closed lower, so maybe that doesn't look so good. If we do look over at the 10-minute time frame, let's just look at the market hours price action here. We can see that the biggest amount of volume, the largest amount of volume, was right at the end of the day, and that was a sell-off, bringing price down to that blue line here at around 564.52. So that is about 8.65 million traded in that 10 minutes. And so without that big surge in volume, the selling, we would have let's see, been up here 567 above that line here. So that makes me think that that's actually kind of, bearish, because it was pulling the price below this level here in the last 10 minutes or so of trading, and that volume was 8 million, which, 65 minus 8 million is going to be less than 60 million here. So there was actually, without that, there was less volume bringing the price up here. So that actually makes me think that, with price going up and volume going up, but that volume only going up because of a last minute sell to bring the price below this close, that makes me think, hey, big money, large firms. See that signal at the end of the day? We did not close above that close. And so that makes me think that I'm a little bit bearish, to be honest, Very interesting, but we'll probably want to take a look over at the SPX, because this is the S&P 500 index, so probably a little bit better data over here, but there's no volume, unfortunately. So, but maybe I could look over at TradingView to look at the volume there, so I'll probably do that in a second. But yeah, we do have higher highs closing well below the closing price here. If we do look at the 10-minute time frame, yeah, massive sell towards the end of the day. So yeah, that's not such a good look. Also closing below these two levels that I have drawn here. One of those being a previously filled gap, that thick blue line, the other one being that light blue line, which, let's see, is just kind of the top from over here. So being approximate, we do have this gap to the downside at $5,569.06, also corresponding with this confluence of levels. This orange uptrend that we have here going back to the lows from April 19th and August 5th of last year. So that being a pretty notable level, I suspect we will be pulling back to that, finding it as support. So yeah, I am actually kind of bearish on the SPX, the SPY, the stock market in general. Just for today, maybe over the weekend, I am not sure. But I should note, I don't think I mentioned it, that this SPX did close yesterday at a price of $5,663.94, being up 0.58% on the day. Got to get better at reading those numbers, and practice is what makes perfect. But yeah, let's look over at TradingView real quick, just to get an idea of what is going on with the SPX. So the S&P 500 index, I have actually not really looked at this, so I don't know which one is the best to be looking at. I will go with the top one. So let's look at that. And we do see this volume here, so that looks really nice. Yeah, that does look like kind of a topping tail going up higher here. And with the volume, that volume is actually, just like the SPY is higher. So over here on May 2nd, we saw a volume of, it says 1,000, but I'm not sure. Okay, so that's because it's telling me the price. So what, the volume number is up here. Okay, so good to know. I think I was reading that wrong in a recent video. I was looking at the number over here. But yeah, so the volume was 2.96 billion, whereas over here, volume was 3.17 billion. And so now let's look over at the 10-minute time frame. So let's see, seconds, no, minutes. There we go. I guess I can only look at the 15-minute. I can't look at the 10-minute. But what we see is this surge in volume the last 30 minutes of trading on Friday. And so we see here over here, and let's actually do some math on this. So I am going to pull up my calculator app. Let's see over here. And so I'm just going to add these numbers together. So we have 334. It's closer to 335, but let's just round that down. 334, so 334 million. And then over here, let's see. And actually, I should probably, here, because we're going to be in billions. Yeah, so I'll do it like that. 334 million plus, it looks like it says 485. But because both of those would be rounded up, I will round this one up from 485 to 486. 486. So got that number there. That's 0.82 billion. And so if we look at the daily candle, again here, we can see that the total volume for the day was 3.17 billion. So I am just going to make this number negative, and then I am going to add to that 3.17 billion. So that would be 3170 million. And we can see there that that's 2.35 billion volume, taking away that drawdown at the end of the day, because that was bearish, closing below the close here and being a pretty massive drawdown the end of the day. And then if we look at the volume from May 2nd, 2.96 billion, 2.35 billion. So we actually had lower volume if we take out that sell-off at the end of the day. So I think that there are a lot of signals going to a higher high. Hey, we're getting higher. That looks good. Volume is higher. That looks good. But actually, it's really not supported with the close lower than the close over here. The volume, after we withdraw that last 30 minutes of trading with the drawdown, we actually have lower volume that suggests some weakness. And I don't know if we have it on the chart here. Let's see. What did I have over here in Webull? I thought that I saw some bearish divergence, or maybe not. Oh yeah, that's just an immediate term here. We do potentially have a lower high in the RSI. Yeah, so that's just right here, lower high there. But maybe that's not an inflection point. So anyways, I feel like I'm not so confident in the stock market going higher. And, I feel like yesterday I was not so confident in the bearish side of things. These things can change from day to day. I think it's very important to be paying attention to that. And so with that being said, I'm just going to pull up the SPXU. I wasn't going to cover it today, but I got to take a look, and I've got to also take a drink of water. Sorry, my throat was feeling a little bit dry. But yeah, let's look at this lower low in the RSI, higher low. And so, yeah, this is also, you would expect it. The SPXU is the ProShares Ultra Pro Short S&P 500. And so Ultra Pro Short, Ultra Short would mean 2x. Ultra Pro Short is 3x short leveraged on the SPX or the S&P 500. This looks like a potential bottoming signal. So yeah, I wouldn't be too surprised if from 22 we came up to, 5%. That's not nothing. So yeah, I am kind of intrigued by this. We got this low here at 81.80. So maybe that's a dip buy level for an in and out trade. Nothing too crazy, nothing too long term. So yeah, just wanted to point that out. Very interested in that. But let's look over at Bitcoin here real quick. Now above 100,000. Very exciting. Currently trading around $103,000 a coin. I suspect we will probably start to see a cool off because although with Bitcoin, maybe we could get back up to 108. Something I want to talk about with Ethereum, but with Bitcoin, I think maybe there's some more room to run that's based on this Fibonacci extension here, going from the lows from here to the high and then pulling back. I could actually pull this back a little bit more, I think. Let's see, what was that? Yep, to there. And so that would still be, above us around 108,000, give or take. But this Fibonacci extension, same idea. That brought us up to around 95,000. And then how much time do we spend consolidating in this range from that big green candle consolidating before we really started to break out? That was around 14 bars or 14 trading days, which in crypto world, that is just 14 calendar days because there are no weekends with crypto or Bitcoin. And so, 2 weeks of consolidation before the next leg higher. So I could see something like that going on over here. And so maybe actually I just want to draw a little rectangle here. So 14, let's say 14 days. I should probably do this like that first. And let's see, 14 trading days, something like that. So I will just move this one over here. And so maybe that is what we see. I am now just going to, let's see, adjust. I'll leave the line because that doesn't matter, but I'm going to make this transparent and maybe make this yellow. I don't know, that we're going to be consolidating there. So maybe we form another bull flag and then make the next leg to all-time highs in the coming weeks, maybe by the end of May. So good to be patient with that, but we could also be pulling back this doodle that I have drawn here. That's not going to happen. So I'm going to delete that. Let's look over at ETH. That's one that I think, I am a little bit more, to be honest, intrigued by. Just a clear upside target of 8,000 in my view by the end of the year. And then also coming back to this confluence of levels here around 1,400. I did make a video on Ethereum on ETHster, which I believe was 420. And that was when price was currently, or at the time, at a high of 1,645. And I will be following up on Bitcoin, Ethereum, as well as Dogecoin and other altcoins tomorrow for Crypto Corner Sat Stacker. So I'm really excited about that. But what we can see here is following this downside test and then this consolidation, it was about, I imagine, 2 weeks or so, going sideways before the upside move. And so about 15 days, or let's see, I'll just do 14 from, when, actually, maybe I should do it from when we tested that bottom and then got the breakout over here. So 14 days, I could fudge that a little bit from, top to bottom, whatever it is. But let's do something like that again over here. So from this place to over here, when we started to break out, that is again 14 days. So what I could see is, maybe some consolidation over here for 14 days. But with this, I could actually see this potentially coming down to around $2,100. And the reason for that is because of, you might notice it, this 100% Fibonacci extension there. Just like I drew this yellow one here that gave us the level of 1850, which we did consolidate below. We did get another 100% extension up to 2,000, around 100, but we actually went past that, hitting a high yesterday, believe it or not, of 2,490, just below 2,500. So very exciting to see that. I think we could be seeing a little bit of a pullback, but what maybe we could be seeing instead is maybe I want to add some other levels to this Fibonacci extension. Got the 100%, which is just the distance from the low here to the high taken from this low up to that point. But maybe what I want to add is the 1618, currently right around there, or maybe the 2618, which we did not quite get to. That is at a price of right around 2,600, whereas the 1618 is around 2,300. So very nice to see those levels up there. I'm probably just going to leave them there. We will see what happens. But real quick, just looking over at Doge, I love Doge, currently trading around 20 cents, almost 21, did hit a high yesterday of over 21 cents. We will see where this goes. Of course, as everybody knows, we want to see Doge at $1, but we'll see if we can get there. Even just getting back to the highs from 2024, that would represent, from current price, that would represent a move of about, over 100% to the upside. As you can see, 20 times 2 is, less than 48. So a very nice possibility to the upside there, but definitely more speculative than Ethereum and Bitcoin in my view. But now, as I've got like 6 minutes left, let's look over at gold, which I do have pulled up here in TradingView. I do have a short position with gold with the ticker symbol GLL, which I will probably be closing out today. And something that is actually pretty interesting here with this, from the low here to those highs, we did get a retracement to around the 50%. Maybe we could be coming down, or maybe we did come down to the 618. If you notice, I don't have this 618 on there, so that's a problem. I want to add that 618. We pulled back to it. That was around 3,289. So yeah, that's probably a good level. It's probably a good time to take some profits before we do see a bounce in gold. But we could be going lower. So I'm just going to actually remove some of those levels. And then also that 100%, we do have the 786 down to around 3,250. But yeah, I mean, I could see this doing something like this, getting up to that level. And then actually, maybe I want to do it like, oh man, something like this. Maybe we do something like that and then go higher. I don't know. Oops, I don't need that extra dot. So yeah, pretty neat. I mean, this just makes me feel like it's a good time to close out my short, and that is a position in GLL, ticker symbol GLL. ProShares Ultra Short Gold, 2x leverage, closed yesterday at 11.16, up 3.91%. Where could I see this pulling back to? So really just like what I did with the, gold, I'm just going to do a Fibonacci retracement over here. And that would suggest where this could be coming back to. So actually, wait a second. What I want to do is this. I don't really see this as being too useful anymore because we did break below that 786. So yeah, what I want to do is over here, this kind of retracement. And so with gold over here, we did pull back to that 618. I want to see if we pulled up to the 618. But this is a leveraged ETF, so it's probably going to behave a little bit differently. So yeah, the 618 almost got to it at 1135, but the 50%, we did get to that at 1116, which is actually what we closed at. So pretty cool. I might want to take a look just to make sure that the levels are exactly right. 1040 down here, 1193 up there, so that does look good. So yeah, I could see this pulling back, and I could see this pulling back to maybe around 1074. I think my average, I dip bought at 1050, just 10 shares. So right now I'm up about $5. It's nothing crazy, but that's something. But yeah, I will probably want to, to be honest, just sell probably around open, or after the stream, I'll probably close it out around 1116, taking that risk off the table, and then maybe rolling into something like the SPXU, because I find that intriguing based on those divergences and the signals and the volume that I went over kind of extensively in this video. I apologize about that. But now, before I forget, while we have a couple minutes left, let's look over at natural gas. And this one, kind of putting in, it looks like maybe a little bit of a double top there. Let's just see the volume. I don't know if I can have volume on this. So let's put that volume up there. And, oops. Yep. Okay. And so also the RSI. What do I want to do? This. There we go. Okay. So this is a lower high here, lower high in the RSI. So that's not any sort of, actually though here, this is a lower high in the RSI, or in the stock price, or in the commodity price. But then we have in the RSI a higher high. So that suggests bearish divergence or hidden bearish divergence. Bearish divergence would be higher high in the stock price or the commodity price, and a lower high in the RSI. We're seeing the opposite of that, so that's hidden bearish divergence. And with that, we also see lower volume over here. So that does kind of make me think that this could be pulling back. And so maybe it would be good to not go long BOIL, which is 2x leveraged long natural gas, maybe it would be good to consider getting a position in cold, which I do not plan on partaking in because, natural gas is the widowmaker for a reason. And this actually, because you can lose a lot of money with it. It's very volatile and very unpredictable. But this, does look like, hey, maybe that's a bear flag. Maybe it's going to continue lower. But what we see here is that we do have higher lows here, higher lows here. Let's see. When we hit the bottom here, I don't know. It's tough to say. This looks like a bear flag. I would think that the cold, ticker symbol cold, Ultra Pro Shares short, natural gas would be going lower based on this. But looking at the commodity itself, I feel like this is probably going to roll over a bit, maybe come down to around $3.50. Currently over here, the commodity at around $3.88. But yeah, I'm probably going to skip, let's see, actually, uranium. Do I want to go over it real quick? I will just real quick. 27.29 was the high yesterday for ticker symbol URA, the global X uranium ETF. Closed at a price of 26.68, maybe putting in a top there to pull back to around 26. Oklo, I believe, I thought earnings, that was a different one. It's probably SoundHound, what I'm thinking of. Earnings coming up for Oklo on the 13th, so next week. I believe that's Wednesday, but I might be mistaken. Oklo closed at a price of $26.95. Actually put in a bearish engulfing candle relative to the open and close from Wednesday's trading. So not necessarily looking so good there, but and also closed below 27. So maybe we're going to start to see a pullback before earnings or following earnings. So good to be prepared for that. But I could see, like I have doodled here, a bounce test of 27, which we did get effectively up in the pre-market around 1.23%. Maybe we get up to around 30, 31 before earnings, and then we see a sell-off. So very interesting there. But yeah, I am going to open up the chat in case there are any requests. Benjamin is saying, hey, what's up? Good morning to you. I'm actually going to cheers you with a coffee, and hopefully you're still here. I will definitely pull up FLNC for you. And let's see. I imagine that's rallied, but if it's not above 5, so this is looking, better. Earnings, looks like analysts are neutral on these utility stocks. Seems like they're neutral. That's coming from Tip Ranks. FLNC lawsuit alert, class action lawsuit against Fluence Energy. And that's also from Tip Ranks from 2 hours ago. So good to be cautious there. Did close yesterday at a price of $4.82, and in the pre-market it is flat. So with this news, that's kind of good that it is flat. And Fluence Energy hold rating, impact of tariffs and contracting uncertainty on financial outlook, did go up 6.87% yesterday. As you can see here, big green candle, volume behind it. So that looks good. I had lost a lot of hope down here. I feel like this is now reclaiming some of that hope. But what's the note that I have here? If no V-shaped recovery and closing week back here, less than 495, and then likely continuing down. And so that was over here. Price from there, just out of curiosity, price did come down a further almost 20%. And so I wouldn't have known, if that was a bottom or whatnot. Let's see. From this, we can see maybe there's a downtrend here that would be suggesting that there was a bottom there. But, if there is downtrending support, it's kind of tough to know if, that's still lower. So, if it's holding above downtrending support, how significant of support is that? But yeah, with this move, I would still look for a close above 496. So I've got a couple levels here. I'll just go over where those levels originate from. And so the low from March 13th was 497. That's the yellow line that I have marked there. And that light blue line is at 496. That looks like it's a historical low or maybe a gap or something. I'm not sure. Historical low. So that was the low from May 12th of 2022, 496 there. And so if we look at the current price action, We did break below that. Over here, all of this is below that. So, yeah, I mean, today's Friday. I think that today's close, maybe follow up with me. I'm probably not going to be doing ticker request live anymore just because the sun's still out when I normally do that at 9 p.m. Eastern because I live a little bit west of the Eastern time zone. And so it's still sunny here, but I will probably do a stream like pre-market prep, but it'll be like post-market prep. For the start of the day, for the start of the week, I'll do that Sunday evening, but I'll probably do it like I do these pre-market preps, and then I'll leave it open for requests at the end. I do work Monday morning, and that's why I would be doing kind of later next week. Or this Sunday, but I request it, then I'll follow up on it. But I would like to see a close for the week above 496, a weekly close. I think that would be significant. If we don't get that, then I think that maybe 496 or $5 would be acting as resistance. So while this move from down here, as I imagine 40%, yeah, I was going to guess that because 20% down from here, 40% would make sense. That's nice. But maybe it's not going to hold. And so rather than capitulating here, maybe this is a good time to trim, lower that risk after it's gone up some. But I think it's going to be important to see if it closes above 496. And speaking about the weekly, let's just look over at this. So yeah, last week, we're seeing it stair step up, volumes increasing on the weeks. So I think that's looking good. We did see lower lows here, also lower lows here. So there's no bullish divergence. So yeah, I think that we want to see this continue to move up here. And if we could get, a close above, let's see, what was the open for this week of start of April, it looks like. The open for that week was 483.5. So yeah, we still want to be going up a little bit higher. There's also a gap here on the weekly. The closing price for the week that ended March 28th was 498. So yeah, we want to get up to, fill that gap. Yesterday's high was 490. So we want to fill this gap on the weekly, and we want to close above 496. So up to 4. But actually, there might be some resistance, or you see this consolidation here. So yeah, I would actually not be surprised if we did get a little bit of rejection in the coming weeks. And then also, if we do look over at the monthly, this is the first green. The month's not over, but potentially this is the first. It really just started. This is potentially the first green month in 1, 2, 3, 4, 5, 6. I was going to say 7. This potentially a 7 count. So potentially this is a bottom, but also potentially this is a bear flag. So yeah, I think it's really going to be really important to see where it closes at today. I hope that it closes above 496, but if it doesn't, maybe it's good to take a little bit of the risk off the table. But yeah, thank you for the request there, Hydra Hustler. I will pull up WOOF here last minute. But then I am going to get ending this so I can watch Gareth Soloway's game plan before the market opens. Those tend to be about 20 minutes long, and we got about 22 minutes before the market opens. So yeah, WOOF, which is Petco Health and Wellness, closed yesterday at $3.17, down 1% on the day, but bouncing about 1.58% in the pre-market to around $3.22. Let's look at this. So far this has kind of, it's taken longer. This little V-shaped bounce was kind of this long bounce here, a move up here, pulled back. So this does look like it's more or less tracking what I had doodled here. And so, yeah, I would want to see, actually, let's, so from the low here to the high here, let's just zoom in on that. Let's do a Fibonacci retracement. And we can see that it did dip down to the 618 around 287, hit a low on April 30th of 286, pierced that level, and then started to bounce. I think that's looking good. And then what we can see, this is actually looks really nice in my view. From the high here on April 2nd, that was around 358.5. We can draw a trend line from there. That looks like it broke out. So that looks really good. We'll see where it closes today. If it closes above $3.10. I think that looks like, it was just a retest. If it does pull back some today, that's just a retest of this level that it's broken out from. So I think that looks really good. So I'm going to make this line thick, and I am going to make it green because that looks like, we've broken above it. It's below us now, and so if it does dip to that level, if it tests it and bounces, that's a dip buy opportunity before a continuation higher. And what I can do, let's see, a Fibonacci extension, so from the lows over here to that high, and then dipping down to the low here, that would potentially be suggesting a target price of, let's see, $3.83. And since I do have the 1618 up there, that does happen to correspond with the end of my doodle there around 463. So I think that could be happening, but also we do have this consolidation over here right around 380. So maybe that's a good price to consider trimming at. And that also happens to correspond with, I wasn't lining my cursor up with it. I was just corresponding it with the bottoms over here and this consolidation. 380. Yeah, so I think a move to 380, there's probably going to be some resistance there, and that would represent from, let's see, approximately current price around 323. The open price from yesterday, that would represent an 18% move to the upside, nearly 20%. So very nice move there. And even, I should note, even just getting back to the highs over here, that would represent an over 10% move to the upside. So yeah, I think that the WOOF chart is looking really good. So really cool request there. Yeah, I would long it for about 10%, but personally, I am not going to partake. I just like all of the tickers that I have here on the side, too much for me to follow. And so when I say all those tickers on the side, just get Ed out of the way so you can see them there. But yeah, I will be doing a crypto corner tomorrow. So that should be pretty exciting. Maybe actually, no, I work late tonight, so I'm not going to be feeling up to it. So yeah, I'll see you guys for crypto corner tomorrow, and then probably a post-market prep on Sunday, and then I will be doing kind of a channel update probably on Saturday, just to give you guys an idea of what I'm planning on doing. I just think that these live streams are more fun to get the exchange of ideas, the suggestions from you guys, and then to just follow up on some of these more fundamental stuff, whether it's the volatility, the SPY, and crypto. Yeah, so I hope this was enjoyable for you guys. I guess I did go over Oklo and uranium, so that's good. But yeah, with all of that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market and next week post-market preps. Like this. Thanks a lot for watching. Have a great Friday and a great start to your weekend. I hope it's a wonderful day for you guys.